Good afternoon, MMTs. As we understand it, it's 1:11 p.m. It's 9/3 calendar 2013. The bull came ripping back from that August selling that we started way over here at 15.6. So, as we went into September with headlines overnight out of China, and other headlines around the world that people liked, and we had some data, but we're going to take a look at where we said that the S&P, we're going to talk about that next, but how the S&P and the Dow look almost identical. So for September 3rd right here, we started in the Dow, and let's just break this up right here. This is where we had rallied on up from the lows of the day. 14, so the low of this particular bar was 14,760, and we rallied to the upper end of our resistance levels right at 14,909 here, and then we had that mid-morning reversal in the Dow all the way back down from 14,909 MMT to the low of 14,776. It actually came down. And starting the month of September, this is a proven fact of the volatility. What is happening here from the original downtrend, and this is a 60-minute Dow, is that we can clearly see within the Dow how we hit that bottom and they leveraged it right back up. Each one of these lines on the Dow were 21.47. So we rallied straight back up, tested that resistance, and then rallied straight right back down. So the high here was 14,933 on that bar, and the low reversal on the 60-minute bar came right back down to 14,777. How about that? Right back down in here. So it was range bound. However, the Dow has been selling into the strength of the move and the gap this morning in the Dow 30. This is the way that the price volatility will start within the Dow Jones and the broader indexes going through the calendar month. This is a 4-day week. A lot of people are on vacation. There's a Jewish holiday coming up toward the latter end of the week. And not only that, you have the monthly jobs report, you have the ADP report coming out, so you have a slew of economic data. You also have the overhang that the market is going to chew on. And what are they going to chew on? They are going to chew on a lot. They are going to chew on things that the Federal Reserve, that's one. How about Syria? That's two. How about the leaders? All the leaders sold into the rally. So the volatility is going to be that it's going to be that way. They got the treasuries. Uh, there's lots of things. You got elevated volatility meet subdued volume, meaning that, yes, you did have this reversal volatility, and it was very range bound on the Dow, but the Dow is trying to put in a bull rally from the August selling, and the price volatility in the Dow will continue to move at much higher levels. Yes, it's a 60-minute chart on the Dow. The S&P 500 is up next. Once again, September starts off good because you were short-term oversold, but here's the lesson. It's going to continue to escalate the price volatility. And every upper movement that the bull goes to right now, it's clearly showing that it's selling off in the Dow 30 component.